This video shows how to use consulting tool on operational improvement which has been originally developed by JICA BD's project. As presented in the previous video, the consulting tool includes several Excel sheets. The tool includes not only production and inventory management sheet, but also several Excel sheets related to statistical method and self-management, which will be presented in this video. Quantitative method is one of the important topics which SME consultants should manage because this is very helpful for quality management and marketing analysis. If a candidate does not explain the term presented in this slide, such as statistically significant, p-value, correlation analysis, and regression analysis, please learn them by reviewing some textbook on basic statistics. One of the consulting tool sheets refers to statistical testing, which can identify whether the difference between two groups is statistically significant or not. This can help business owners' decision making, supporting that the enterprise buys raw material from two suppliers denominated as A and B. 3 of 100 pieces of raw material provided by supplier A have quality defect, and 15 among 150 pieces of raw material provided by supplier B, the difference of quality between two suppliers is significant statistically. The sheet can present statistical testing results automatically at line 24. In this case, the difference is statistically significant. Therefore, it can be recommendable that the company buy raw material of the supplier A with less defect. In the previous case, if the number of material with defect from supplier A is 5 instead of 3, there will be no difference which is statistically significant. In this case, we can say that the difference between two suppliers can be occasional. Thus, statistical testing can facilitate our operational decision making. Sales forecast can be carried out by several methods, including analysis of past sales record and regression analysis. One of the consulting tool sheet refers to sales forecast based on past sales record. This is a sheet on sales forecast by hot winters method. Supposing that today is the end of the year 2021, the sales of the first quarter of the year 2019 was 95,000 birds. That of the second quarter 2019 was 80,000 birds. The sales of the third quarter of 2019 was 75,000 birds. The sales of the fourth quarter of 2019 was 86,000 birds, etc., etc. In this case, estimated future sales amount will be calculated automatically. The sales in the first quarter of the year 2022 will be 117,622 birds. The sales of the second quarter will be 105,771 birds, etc., etc. Thus, the sheet can calculate automatically the estimated future sales. It is important to point out that the sales forecast based on past sales record have some limitations. For example, hot winters method requires the sales record in past 3 years, and the sales forecast depends on the past sales tendency. Therefore, this method can mislead under some irregular business environment. One of the consulting tool sheets refers to regular customer management. This sheet can facilitate to identify whether important regular customers have purchased from the company recently, frequently, and enoughly or not. First, the company's main regular customer to be managed should be fulfilled. Then, the sales for these clients should be recorded in the left side. In the column of customer, pull-down list is automatically available based on the records of main client already fulfilled. When the sales records are fulfilled, the analysis result will be presented automatically in the right side. In this case, how the company purchased most recently has bought the most. Daniel Construction has purchased the most frequently, and already 85 days have passed since the last time when Beautiful Furniture Company bought. Thus, this customer management sheet can reveal which customer has bought enoughly in terms of the recency, frequency, and total amount. If some clients have not bought from the company recently, it is recommendable to call by phone to ask new orders. In this way, the company will not lose sales opportunities. One of the consulting tool sheets is cash flow budget. It is important to point out that elaborating cash flow budget is useful to prevent from working capital shortage. This sheet presents an example of such practice. This sheet, only part shaded by red color should be fulfilled, and the other part will be calculated automatically. First, cash at this moment should be presented here. Second, estimated sales amount can be reported in this line. Third, percentage of sales by cash should be put here. Fourth, estimated cash outflow, which are the company's operation expenses, should be registered here. Then, estimated future working capital balance is presented. Thus, future cash shortage can be avoided. Let's see an example on how to fulfill this cash flow budget sheet. Supposing that an enterprise has 14,000 worth of cash balance at the beginning of the budget, had sales of 26,000 worth in the last month, is expected to have 22,000 worth of the monthly sales, etc., and the percentage of sales by cash is 70%. Estimated cash inflow can be calculated automatically as presented in this slide. Then, when a company should pay 1,200 worth as monthly rental cost for operational space, 7,000 worth as monthly salary for employees, 10,000 worth as monthly cost of raw material, and 5,000 worth as other monthly costs, cash balance at the end of the coming year can be calculated as 6,600 worth automatically. In this sheet, the part shaded by red color should be fulfilled, and the other part in white color will be calculated automatically. Consulting tool on operation improvement has the other Excel sheets as well. The most of them are explained in the textbook for fostering junior consultant as business operation format. Therefore, it is recommendable to review the textbook so that the candidate can manage it well. This is the end of the video.